Okay, time to talk money here on NECN this morning. And with the new year, of course, we are taking a look at the economic outlook for 2020. Joining us this morning to give us a better sense of what to expect, Senior VP at Rockland Trust, Doug Butler. Good morning, Doug. Thanks for coming in.
Great.
Okay, we've got a lot to get to this morning because it's the start of a new year, start of a new decade, in fact. Let's start with the outlook for 2020 because this is an election year, and that could have an impact on the economy, and the economy, of course, vice versa, will have an impact on the election, as we know.
Yeah.
So what can we expect?
I mean, I think election years are always a toss-up, and right now, the way we see it is the economy is very strong. Jobs numbers today continued to prove that point. The American consumer is doing fantastically well.
Okay.
Unemployment's very low. Wage growth is okay. Everything's going well in the economy overall. But election years are funny in that you get a lot more geopolitical tension, and we've seen that in the last week.
We've already seen that, right? Yeah.
And the economy will largely determine how the presidential race goes, or historically it has. So we've never seen an economy this good where a president didn't get reelected. But conversely, we've also never seen a president with approval ratings this low that got elected. So right now, the election, from our standpoint, it's sort of a 50-50 proposition.
And I want to ask you, Doug, about the outcome of the election.
Yeah.
In terms of whether a party maintains the office, the highest office in our country, could have an impact on the economy. Can you explain that?
Yeah, I think it really stems from either if President Trump stays in office, can he end up winning control of all three branches of government and making it so that a more conservative, more sort of very pro-business agenda gets pushed forward. That's an unlikely scenario. Equally unlikely is, you know, somebody like a Senator Sanders wins and everything turns Democratic. The most likely scenario is probably that the markets do reasonably well when there's divided government, because there's nobody pushing one agenda all the way to the right or all the way to the left. We're still, even though there's all this division in the country, we're still generally a pretty purple country.
And that leads to market stability.
And market stability, the markets love stability, and we love to get, solid jobs numbers, solid earnings numbers, and continued strength in the economy. And if those happen, the markets will continue to do well.
Okay, now I want to touch base very quickly because of the Iran crisis that we've been talking about over the last few days. How has this impacted the economy, and how do you see this impacting the economy moving forward?
Sure. I mean, the Iran crisis really could result in dramatically higher oil prices. If Iran went and they attacked Saudi Arabia about 6 months ago, if they went and attacked there, it could have, a sizable increase in the price of oil and price of gas. On the converse side is, right now the U.S. is a net oil exporter, so it's going to hurt our economy a lot less if oil prices rise than it would have, say, 20 years ago or back in the 70s.
All right, and what does that mean for the average American? Before we've got to let you go, Doug.
Sure.
Break that down. Why does Joe Schmo at home care about the cost of oil when it comes to this Iran crisis?
Right. Well, Joe Schmo at home is like, will end up paying more at the pump. They'll end up paying more to heat their house. They'll end up paying more for those things. But on the other hand, because the economy's not so tied to oil, he's not likely to lose his job. So we're able to afford a hit in oil prices much more so than we could have 20 or 30 years ago.
Perfect. Doug Butler with Rockland Trust, thank you so much. Great to see you this morning.
Great seeing you.
Susan. All right.